Hello again. So we are still on Chapter 11, Statement of Cash Flow. And we had two homework problems that we're going to go over in this video. So why don't we just begin? The first problem is problem 11-2A. Problem 11-2A, which is on page 584. Now, this problem is a little, how can I say? I don't want to say easy. None of these problems are easy. But in this problem, a lot of the work was done for you. So here it's a matter of knowing where to put things more than calculate things. So if you read the problem, I'll read it for you. Again, this is page 584, right on the top. Seth Erkenbeck, a recent college graduate, has just completed the basic format to be used in preparing statement of cash flow indirect method for ATM software. So they give you the statement, but they leave everything out, right? It's all blanks. Except on the very bottom, they tell you what the net increase in cash is. It's $3,765. They tell you the beginning cash, they tell you the ending cash, right? So they gave you the end of the statement. Now we have to go and actually do the statement. The number we have to tie out to is that 3,765. Now, rather than give us balance sheets, they gave us information that we need. All right, so why don't we do this? This is ATM software developers statement of cash flows for the year ended December 31, 2021. Okay, and let's divide our page into three parts, right? We've got cash flows from operating activities. Cash flows from investing activities. And cash flows from financing activities. Right? And then we're going to wind up with net increase in cash. And we already know what that number is. It's 3,765. Cash balance beginning of period 7510. Right, and that gives you the cash flow at the end of the period. So this is our number here. This is the most important number to us. Okay? Now, let's begin. Now, the first number I like to look for is net income, right? That's how you start every one of these things. And net income was 12,400. And then I like to call this adjustments. They have like a fancy name for it, adjustments to reconcile net income to net cash flow, right? I just say adjustments. Right now, when you're doing this problem on the computer, it's not going to say things like add and less. I am going to put those things in here. I just don't want to list things that may or may not make sense to you. Depreciation expense. 5465. Okay, now, rather than look at this list and try to shoehorn it, that's an expression where I'm trying to force things. Why don't we just go down the list and put things where we think they belong, right? See, every statement starts this way. It starts with net income, and then the first adjustment I like to make is depreciation expense, okay? But rather than fight the problem, let's use it to our advantage. So I see the first listed below in random order are items to be included on the statement. Cash received from sale of land. Land is a long-term asset. Where do long-term assets go? In fact, you want to put here in the margin? Income statement. Current assets. Current liabilities, right? That's what goes in this section. This section, long-term assets, and this section, okay? So where are we going to look? For the operating activities, we're going to start out with the income statement, then we're going to look at current assets, then we're going to look at current liabilities. For investing activities, we're going to look at the long-term assets. For financing activities, we're looking at long-term liabilities and stockholders' equity, right? Just so you remember. So that first transaction you see there, cash received from the sale of land. Land is a long-term asset. Cash received from sale of land. All right, let's write the amount in. 8650. Okay. And it's a positive number, right? Because we received cash. Now look at the next one. The next one says issuance of common stock. Common stock is stockholders' equity, and stockholders' equity goes in the financing activities. Issuance of common stock. And again, that's a positive number. Depreciation expense we already handled. Okay, now increase in accounts receivable. Accounts receivable is a current asset, so it's going to go up here in the operating activities section. Now, we have to make a choice. Are we going to add it or subtract it? Increases in current assets get subtracted. Less increase in accounts receivable. Okay. Increase in accounts receivable minus 4090. Decrease in accounts payable. Accounts payable is a current liability, right? Current liabilities also belong in the operating activities section. Decrease in current liabilities get subtracted. Less decrease in accounts payable minus 1760. Next one, issuance of long-term notes payable. Long-term notes payable, not short-term, right? If it was short-term, that might go up here. But long-term notes payable, issuance of long-term notes payable. Long-term liabilities are a financing activity. And remember, cash is coming into the business. We borrowed money. That's a positive number. Next, purchase of equipment. Equipment is a long-term asset. That's an investing activity. Purchase of equipment. Now, that's a negative number because cash was used, right? Cash was spent. 39,865 minus 39,865. Decrease in inventory. Inventory is a current asset. Okay. Now you got to remember the rule. Decreases in current assets get added. Add. Decrease in inventory. $1,475. Decrease in prepaid rent. Again, prepaid rent is a current asset. Add the decreases. See why this is a tough topic, because, you know, it gets confusing whether you add and subtract sometimes. I get that. But this is forcing you to really understand where things belong on the financial statements, especially the balance sheet. Right? So again, if you're not sure, go back to like one of the earlier chapters, chapter 2, chapter 3, chapter 4. Look at a balance sheet. Just become familiar with the format and where things belong. Payment of dividends. Payment of dividends. Dividends is part of retained earnings, right? Payment So that's a minus number. Payment minus 6370. Right? And the last one, purchase of treasury stock. Treasury stock is part of stockholders' equity. Purchase of treasury stock. What happens to treasury stock? What happens to your cash when you purchase treasury stock? It decreases. Minus 2615. Okay. So now what we're going to do is we're going to add all the numbers together here. We're going to start over here. And we're going to add all of these guys together. 14,395. Cash flows. Should say net cash flows, right? Net cash flows provided by operating activities. Okay. Right, so notice net income was 12,400, but net income is not cash. So how much cash did your business generate? You see how this statement is, in my opinion, the most important of all, right? Because cash is, you can't lie about it. You either have it or you don't. So how much cash did this business generate doing the thing that it does day after day after day, right? $14,395. That's the significance of that. Right now, let's take a look over here. So investing activities. I bought equipment, so I had to spend that, almost $40,000, and I sold some land and I got that. Let's combine those two. Okay, and that's a negative 31,215. Net cash flows. Okay, they say provided by, I would say used by. I'm going to say provided by because when you're doing the problem, you know, the computer is going to grade it and you got to tell the computer what it wants to hear, right? Okay. All right. So now we have the financing activities. In fact, let me do this because you want things to, when you're reading the statement, I'm just highlighting things so it's easier for you to see. Right, this has nothing to do with when you do the problem and for homework. I just want you, if you go back and look at these notes, that you're able to see things. Okay, so let's do this now. $20,585 net cash flows provided by financing. There you go. Right, and then do the math. I'm going to take this 20,000, take these three numbers, 14,395 minus 31,215 plus 20,585. And when you add those three numbers together, it should come out to 3765, right? Which it does, right? Because I've already done the math. Underline that, okay? Take that 3765, add it to the beginning amount of cash, and there's your ending amount of cash. So these numbers came right off the balance sheet, right? That was the beginning cash, that was the ending cash. Okay. So that's problem 11-2A. Not too terrible. Okay. All right, so now let's see, I need to add. Now we're going to do the next problem. It's 11-4A. Right, and this is on the next page, page 585. All right, so here we go. The income statement, balance sheets, and additional information for Videophones Inc. are provided. So what numbers are we going to need off that income statement? Right, why don't we start with that? We're going to need net income. That's 104. We're going to need depreciation expense. That's 37,000. Loss on sale of land, 9,000. Right? I don't see any amortization. I don't see any gains anywhere. Right? So that's where that's all we're going to need. Now look at the cash. The cash went from 227,800 to 254,600. 254,600 minus 227,800 is 26,800. So cash increased 26,800. That's the number we have to wind up with. All right. Now, what I want to do next is I want to look at the current assets, right? You see them as a group. Accounts receivable, inventory, prepaid rent. Those are going to go in the operating activity section. The long-term assets are going to go in the investing activity section. The current liabilities in the operating activity section. The long-term liabilities and the stockholders' equity in the financing activity section. So I like to draw brackets around those amounts and I write next to it, operating activity or financing activity, whatever it is. Okay. Additional information. Purchase investment in bonds. Right? If you want to write next to that, that's an investing activity, right? Purchase investment in bonds. So if you look at your long-term assets, you have investments. They went from 0 to 115. That's why. Sell land costing $40,000 for $31,000, resulting in a $9,000 loss. Okay, that's also an investing activity. And the number we're really looking for there is 31,000. Purchase $70,000 in equipment by issuing a $70,000 long-term note payable. No cash is exchanged. I'm going to write next to that NA, because if I didn't use cash, it doesn't go on the statement. And then number 4, paid a cash dividend of $30,000. That's a financing activity, right? That's a financing activity. Okay, so let's see. You know, we may not have to use the T account analysis here, right? We may not need it. So let's get started. This is Video Phones, Inc. Statement of cash flows for the year ended December 31st, 2021, right? Cash flows from operating activities. That in bold, so it's easier to see. Net income. Net income, if I look at that balance sheet, the net income is 104. Adjustments. Add depreciation expense, right? Depreciation expense was 37,000, wasn't it? 37,000. There was a loss on sale of land. Add loss on sale of land, right? And that was $9,000. Okay. I'm finished with my income statement. I shouldn't have to look at it again, right? So these amounts came off the income statement. Okay, now let's look at the current assets. Current assets. I had accounts receivable, inventory, and prepaid rent. Okay, now let's see. Accounts receivable went from 70 to 92. That's an increase of 22. Inventory went from 105 to 45. That's a decrease of 40. And prepaid rent went from 7,200 to 14,400. That's an increase of 7,200. Okay, so remember with the current assets, it's a little weird. You're going to add the decreases and subtract the increases. So accounts receivable increased by 22, less increase in accounts receivable, minus 22. Okay, inventory decreased, add decrease in inventory. That was 40,000. Right, less increase in prepaid rent. We're finished with the current assets. Now we can go to the current liabilities. Okay, let's look at the current liabilities. Got to turn the page. Accounts receivable went down. It went from 91 to 75. So 91 minus 75, that's a minus 16. Interest payable went from 12 to 7. That's a decrease of 5. And income tax payable went from 15 to 16. That's an increase of 1. Now you got to remember with the current liabilities, add increases, subtract decreases. Less decrease in accounts payable, minus 16. Less decrease in interest payable, -5. And add increase in income tax payable. That's a +1. Okay, that is it for operating activities. I want to add them together. So that's a positive 140,800 net cash flows provided by operating activities. So we picked all the numbers off the income statement that we needed. We took all the current assets, analyzed them, added, subtracted, did the same thing with the current liabilities. Now it's time to do the investing activities. Cash flows from investing activities. So from the investing activities, let's look at what accounts there were. Long-term investments, land, equipment. And I can see that the investments went from 0 to 115. So what I want to look for now is I want to look for some information to tell me why that might have happened. I could draw a T account for it, right? But I may not have to. It may be easy enough that I could just figure it out. So additional information, item number 1, purchase investment in bonds, 115. That's a minus 115. Remember, when cash decreases, you want to subtract. Right, now they also told me, I can see the land went from 260 to 220. Land decreased by 40. Why? Number 2, sell land costing 40. That's why land decreased by 40. It was sold for 31,000. Cash received from sale of land. That's a positive 31. Okay. And now purchase equipment. Now equipment, if I look at the equipment account, it went from 220 to 290, an increase of 70. But if I read number 3, it tells me that I bought that equipment, I didn't use any cash, I got a note payable. Debit equipment, credit notes payable. No cash involved, doesn't go on the statement. I can ignore it. Let me add these two amounts together. All right, it's a negative number, minus 84. Right, and these were the, where did I find these numbers? The long-term assets, right? And additional information, right? Cash flows from financing activities. Okay, now let's see. Declare and pay cash dividend. That was an easy one. Right? Pay cash dividends. Right, now again, since they paid, that's going to be a negative number. The negative number is what? Minus 30. Now, let's look at the accounts. Long-term liabilities and stockholders' equity, right? Long-term liability, the notes payable, we know why that went up. I bought equipment. See, if I buy equipment, I could go to the bank and borrow money, debit cash, credit notes payable, and then I could take that cash and buy the equipment. Debit equipment, credit cash. If that's what happened, that would go on the statement. But here, what happened? When you buy things sometimes directly from the seller, sometimes a private transaction, you don't go through a bank. Somebody had a piece of equipment, you bought it directly from them, and you work this out. Say, look, I don't have $70,000 in cash to pay you, but I can afford to pay you $1,000 a month, $2,000 a month. So why don't you hold the note on the equipment? If I don't pay it, you take it back. Or a lot of times, if you buy things directly from a dealer, let's say you were buying a bulldozer or a tractor. Don't you think the companies that sell those things arrange the financing? Right? So you would buy, say, from a company like Caterpillar, for example, you would buy a bulldozer, right? And you would buy it directly from them, and they hold the note. What else we got? Common stock didn't change. That's a good thing, right? Because if common stock changed, if it increased, chances are that you sold some stock. So sometimes they do things like that. They'll show you that, they'll say common stock went from 400 to 410, and then they won't say anything else, right? And then you just have to say, what was the most likely reason why that happened? Right? I think that's it. I think that's it. All right, so let's see now. So we only had this one thing here for minus 30. Cash flows, or net cash flows, sorry. Divided by financing activities. Okay, now let's add these three amounts together, and it has to come out to that amount that we figured way back in the beginning. Way back in the beginning, we said cash increased 26,800. When I add these three things together, it should add up to 26,800. If it doesn't, I made a mistake. 26,800, thank God. All right? Okay. So now we're going to call this the net increase in cash. We're going to add cash balance beginning of period, right? Get that number right off the balance sheet. That was 227,800. Right? And then if I add these two amounts together, $254,600. Right? Look at the balance sheet. That should be the ending balance of cash. $254,600. Cash balance end of period. There you go. So there's your statement of cash flow under the indirect method, problem from beginning to end. So that's all I had for this chapter. And the next video will be chapter 1 in the next part of the text. Remember, this text is really 2 books. You have the Spiceland Financial Accounting book, and then you have the White Cotton Managerial Accounting book, right? So we'll do the chapter 1 in the next part of the book in the next video. Be well.